Welcome in, folks. Got a couple things to react to in this video here today. First off, Tom Lee talking about the S&P 500 hitting 15,000 by 2030. That's a 3x from here. Why he has to say that. That should be an interesting video to react to. And then after that, we're going to hear Tom Lee speak about, this happened actually from today, the other one's from yesterday. Inflation is going to fall like a rock. Looking forward to hearing Tom Lee's opinions and perspectives on that. And then after we get through that, I'll talk about that presidential debate I just watched. Yeah, we'll speak about that. So anybody that wants to stay with me to that part, you can stay with me. If you don't want to stay for that part, you're more than welcome to leave. We'll do the stock market portion first because I know that's what everybody for sure wants to hear me talk about. So appreciate y'all joining me as always. Thanks so much for being here. Thanks for being subscribed. And massive 1000x stock sale coming up 4th of July. It's going to be a one-day sale. If you want to enter in for that, enter in your info. It'll be the pinned comment down there. You enter your name, email, and we'll send over that deal. It's going to be a one-day deal for 1000x, and then you'll also get your 1000x stocks founding member card in the mail sent to you as well. So that'll be pinned comment down there. Alrighty, so let's get into this.
Because he's sitting right next to me. Tom Lee, good to see you.
Great to see you, Brian.
You have not been drinking?
No.
Okay.
Not recently.
Not recently.
I should have been drinking watching that damn thing I just watched. Anyways. Don't get me started.
15,000.
I'll wait.
I'm just going to sit here and listen.
Okay. Well, there's a couple of reasons behind this. One is this would be the third time that stocks entered a cycle where annual returns compound at high teens. You know, you had the roaring 20s, and then you had the 50s through the late 60s. Mm-hmm. And this is a third cycle. They all coincided with a surge in the number of people aged 30 to 50. So in other words, the number of prime age adults. And this time it's powered by millennials and Gen Z.
Mm. So is this the law? Okay, so math. I wasn't not great at math, but I'd like to think I know a little bit. Big numbers get bigger faster. That compounding.
That's right.
And you think there's that, but there's also this massive wave of people about to enter their peak earnings years.
Yeah, so it's a...
Demographics.
Exactly. It's a demand story, meaning when you get to your prime years, 30 to 50, Urban Institute shows you start to borrow more money. You're making big life decisions. This is what powers the economy. On top of that, we have a really a big opportunity for U.S. technology companies because of AI, which is supplying the global digital labor because there's a global labor shortage. So these two forces are combining to, I think, power almost a decade of extraordinarily good stock returns.
Do you have a view? Is this...
I just got to be honest. That doesn't win me over as a catalyst to call for this sort of S&P 500 target. Like, no, it's just that's not enough there.
Because we're the United States. I mean, and do you expect that a lot of money from around the world, because China's got massive demographic issues. Germany shot itself in the foot with all of its energy problems. Will we be helped by a lot of money coming into America, or does that have nothing to do with it?
It's actually both. I think that there's going to be a lot of dollars spent on U.S. technology product because the world is short 80 million workers by the end of this decade. That's
right, 20% annual increase from now to 2030. Okay. Earnings growth contributed 12 to 15% of that total. Whew. That's a big number, Tom Lee.
$3 trillion of labor shortage, of labor salary that's turning into silicon. So that means U.S. suppliers of silicon and AI are going to, have a $3 trillion revenue run rate. On top of that, if the U.S. companies are growing earnings at this speed, the PE multiple of the U.S. should go up, and that's exactly your point. There's going to be capital flows into the U.S. And where else in the world do you find the best and most important technology companies? They're all basically in America.
They're all here. I mean, it is amazing to me that NVIDIA alone, folks, NVIDIA by itself is worth 50% more than the entire German DAX index of stocks combined.
Yes.
The 30 biggest companies in Germany, or 33, however many are in the DAX, combined are half the size of NVIDIA.
Yeah.
Because we have liquid capital markets. We have American ingenuity. We have an amazing workforce. 25% of company founders, by the way, are not born here. because we allow a lot of immigration. It's a bold call. What's the risk? When you look at it, you've always got to analyze, say, well, where could I be wrong, right?
Yep. Well, I think there's a risk that we could have
global recession.
A global recession. AI, of course, could become an adversarial development and, upend state nations and cause chaos. But we could also have a risk that it's a bubble and it peaks a lot sooner.
Yeah, and you wonder, by the way, this is a little bit off topic, but I saw some huge bets being placed, and there was a note today, and you forgive me, senior moment, I can't remember exactly who put it out there, but that there was a huge bet placed in the interest rate market that the 10-year would be at 2.25% by like next March. That there'd be this massive decline in yields, either because of the Fed, recession,
it's possible.
Whatever.
It's possible.
You have a take on that?
That obviously is a very cheap bet because I'm sure the skew is for higher rates, not lower.
So it's like a high risk but high reward bet.
Yeah.
Not high risk because you're not betting a lot of money.
Possible,
but the odds are you're going to lose your money.
Yeah, it's like a black swan kind of trade. I think it's possible because, inflation internals are collapsing. I think the headline core CPI, and we'll get Friday's PCE, they're being propped up by housing and auto insurance, which are two components. But the rest of the CPI index, 55% of the CPI basket is below pre-pandemic inflation rates now. It's the highest in 4 years. The 20-year average is 50%. So inflation is tanking.
Except for the home and auto insurance. That's a big deal.
Yeah,
but by the way,
money.
I heard there's going to be some big rate increases coming to New Jersey, folks, by the way.
Okay, so did Tom Lee win me over there in terms of the 15,000 call by 2030 S&P 500? The answer is no. That definitely was not enough there to win me over for that call. Is it a possibility? I would call it, as a bull, I would say pretty low probability, actually. We're at 15,000 come 2030. I would gladly welcome it as somebody that's net long stocks all the time. But with that being said, very low probability because there's a high probability we have some sort of major dip in the market, probably in the next, maybe 12 to 24 months, right? So we have some sort of major dip that takes us down from whatever level we're at that particular time to a much lower level, right? So then you have to climb back in future years and then get back to obviously where you used to be. Then from there, you have to have the expansion up to, eventually 7,500 on the S&P, then 10,000, 12,000, then 15,000, right? And that's very, very difficult. Very, very difficult. So, if I had to put odds on it, I live in Vegas. We put odds on everything. I'd say 10% probability. We're at 15,000 S&P in 2030, although it would be sweet.
500 number, but it doesn't necessarily reflect how you think the year is going to end. Are you going to take a look at your year-end targets now?
We are, Carl. At the early December last year, we thought S&P could reach 5,200 this year, which at the time was almost a 20% gain. We've obviously moved well above it, and the fundamental picture to me looks stronger. I think earnings next year, we originally thought would be 260 for 2025. It's probably closer to 275. I think the war on inflation has been meaningfully better in terms of progress. I know there was a lot of dispute, but I think the last two inflation reports and the fact that 55% of inflation components are back to pre-pandemic levels means inflation is really going to fall like a rock. These are factors that give us comfort that multiples can expand. And so I think 5,200 is clearly too low, but I don't know how much above 5,500 there is into year end. So I think in a couple weeks we'll be addressing that.
You actually use a graphic of a falling rock in your charts to describe elements of inflation that you think are dropping. You said we're beginning to see insurances break, waiting for shelter to follow suit. Some of your forecast, Tom, on new cars and used cars, do you actually think we could see that kind of deflation?
Yes. I think one thing to keep in mind is that there's almost 290 million cars on the road today. So when used car prices fall 10% and they're continuing to fall, that's a meaningful amount of disinflation and may be painful for people who borrowed money to buy cars.
That's a good point.
But that is also saving people who are buying cars. And so I think there's a lot of goods disinflation in the pipeline, and especially with new cars. Inventories have really been picking up. The CDK cyber security hack might sort of disrupt it short term because there's a shortage now of new cars available, but I think the trend for new cars is also lower.
So the trend for new cars lower and used cars lower, that is what? What? That is recessionary. That's what that is, right? Is that good? So can you expect, a great ripping economy if you have car prices going down? No, you can't, right? If used cars are being devalued, let's say he says 10% there, and new cars, they have to drop prices, right? Well, imagine all the people that have loans on those autos that are already paying very high interest rates and then are underwater on their vehicles, right? That, at the end of the day, is kind of a recessionary thing in itself. And so, therefore, you have to expect some weakness in earnings from companies, right? And then you can also expect auto loan delinquencies to go up, which they're already at pretty much the highest they've been in over 10 years. And you'll expect credit card likely delinquencies, which are already the highest they've been in at least 10 plus years, right? And so you look at it from kind of those factors, then what happens then is banking system, right? They start to contract. They start to not give as many loans out there. Simultaneously, if you go delinquent on a car payment, if you go delinquent on credit cards, whatever, right? Your credit score does what? Your credit score then drops, which then in turn means essentially you are going to not be able to get all those loans and all those credit card offers and in the future, right? And to go buy a new auto on a big loan, right? You're going to have to wait likely years to kind of build back up your credit, which then that is a recessionary for the economy because then people can't spend as much, right? So these are all things to kind of factor in here. And that's a problem with Tom Lee that I have. That's pretty much the only problem I have is he just doesn't look enough at the other side of the coin. And he just is a little too rosy glasses all the time, which is a great perspective to have when you're in a bull market, but it makes you look really, really bad when you're in a bear market because clearly, people can see that he just doesn't look at it from the other angle, right?
Tom, what happens to earnings estimates in this environment? I mean, I get that it's good for the market if inflation falls and the Fed starts cutting rates, maybe that trumps everything. But if the economy starts to really weaken and these forecasts for Q2 are coming down, then what about the earnings picture?
Well, it's, first of all, there's always winners and losers. There's a lot of companies in sectors that have no correlation to inflation. Technology is one example. And there's many groups highly correlated to the rate of inflation, like basic materials and energy. We're not talking about overall inflation going negative. It's actually that it's going towards 2%. So there's still plenty of companies that are getting price. And as you know, the biggest pressure on many companies' margins has been wage pressures. That's cooling a lot. And gasoline's cooling, and that's really helping consumer wallets. So I think it's pretty complex. But to us, if the global economy is picking up and earnings delivered have already suggested 270 for 2025, I still think we're maybe going to be closer to 280 next year.
I don't know, real wages are going down, though, so do keep that in mind.
Tom, if markets tend to lead the fundamentals and we've run up here, to let's say 21 times forward earnings, why would improved earnings relative to expectations now lead to multiple expansion, on top of what we've already had?
It's a fair question. It's really the composition of what contributes to the gains, because if you look at S&P forward, it is high. I think forward earnings multiple is like 19, but the median is 16. And the median PE in the Russell 2000 is actually 11 times. So I think that there are going to be many stocks that can re-rate towards 20, but the PEs many stocks that are at 27 PE, I mean, they could increase in their multiple, but I think there'll be a lot more juice in the 16 multiple going to 20 than there is 27 going to 28.
That's
hey, finally, point. Tom, 5 days in a row, S&P headline index and breadth have diverged. We haven't seen that kind of streak since the late 90s. Are we going to start assembling lists of analogs to the late 90s? And is that a good thing?
Carl, the late 90s didn't end well. So I think if this is going to look like the late 90s, then investors do have to be really preparing some portfolios that are appropriate for that, and that, that in the late 90s, that meant to really be patient with value, and then, of course, be ready to exit the high momentum. In some ways, I think the skepticism that exists today is, I was an analyst starting in 93, so I saw the 90s. There was a lot more ebullience back then, and a lot more people who didn't think stocks could ever go down. I think there's a lot of top callers today. So for me, this feels a lot more mid-cycle. And I know it sounds surprising, but there's just too many top callers, especially among our institutional clients.
Yeah, it's not even really about top callers or not top callers or anything like that. What it's really about is, where do these companies' earnings go, right? Do we see, what point do these companies on a sequential basis, meaning essentially on a quarter-over-quarter basis, their growth start to become very minuscule, right? And specifically, what stock am I thinking of? I'm thinking of NVIDIA, obviously, right? And when that happens, then people are going to be worried about declines coming. When does that happen? That might not be till 2026. So maybe that's the moment, the real cracks start to show in the market, right? Outside of some epic recession or something like that beforehand. And so that's a moment everybody's really waiting on, is that specific moment. And then we can talk about, then the big downfall comes. But until you get that, it's just really hard to get the market down, because the companies are just reporting, specifically NVIDIA, such great numbers quarter after quarter on a sequential basis, right? So that's kind of my thoughts there. Presidential debate, where did I even start with this? How do I feel about watching what I watched tonight as an American? Disappointed? Not to say I went in that thinking it wasn't going to be disappointing. It was just like, it was extra disappointing, I guess I can say. And let me first start out by saying I don't back either candidate. I won't be voting for either candidate. I've never voted in an election in my life. And if I die never voting in an election, I lose no sleep over that. That's perfectly fine with me. That's my own personal call. You make your own decisions in life. I make my own decisions, right? And I don't care if people judge me. I've said that a million times on the channel since I started on YouTube in 2016. I don't vote, never voted, never want to vote. That's my own decision, right? And so with that being said, I can always talk from an unbiased perspective about politicians, and I can point out their faults and whatnot. So let me start. Let me just say something before I talk about Biden. Let me say something before I talk about Trump. Let me just first say I feel sorry for Gen Z. And the reason is, and I don't know how many Gen Z even watched that debate tonight, but I feel sorry for the ones that watch that debate, and maybe that was their first presidential debate they ever watched, and they think that is how it usually is. Because I was just, as somebody that was watching and has watched, so many debates over the years, that's not usually how it is. That was the lowest level of competency you'll ever imagine in a debate. There was the lowest level of intelligence you'll likely ever see in a debate. That was just, that's as bad as it gets. I can't imagine literally a debate worse. I mean, literally, if I had two homeless guys debating, it would probably be higher level than what I just witnessed right there. Okay. Now, with that being said, let me go after Biden first, and then we'll go after Trump also, because they both have a lot of problems. Biden, I mean, if I had to say, would I hire Biden to manage a Taco Bell? No, he doesn't look competent enough to manage anything, to be quite frank. Never mind the United States of America, right? That was clear as day from the go. His voice, he looked lost several times throughout his speeches. He would get asked a question, he would start addressing it, then he would consistently misspeak. One moment that he was supposed to say, we created 15 million jobs. He goes, we created 15,000 jobs. There were so many of those sorts of instances throughout the debate where he said something and it just wasn't even remotely correct. And I'm just like, you can't do that on this sort of stage. You can't be making, you can't even make that mistake once. Never mind, consistently throughout the debate, he would get lost. He would be speaking about something, then he would just get lost. And I'm like, you can't do that. On the biggest stage like that, he clearly did not look competent. Now, from my understanding, the White House is trying to spin that as, he had a cold or something like that, but, whatever. So the bottom line is, Biden doesn't look competent enough to, like I said, run a Taco Bell. With that being said, Trump. Oh my gosh. where to even start with Trump? I mean, his performance, he looked so with it compared to Biden. But with that being said, if you understand on a little higher like intelligence level, he still did horrible. He was still trash. He got asked so many questions directly, and then would just go off on not even addressing those questions. Then just talk about how Biden's the worst president ever, I was the best, blah blah blah. And they kept having to go back to him. They asked him point blank about like what he would do for families. You know, people like myself, people like you guys that might have kids and childcare costs. He didn't address it at all. He goes straight into Biden. This is bad, blah, blah. Never addressed it. They come back to him again. Want him to talk about childcare. Would he be doing it? Never touched it. Right back to Biden. He's the worst, blah, blah, blah. Then later on, same exact thing happened about if he would accept the election results. He didn't say a thing. They had to ask him again, didn't say a thing. Finally, third time they had to go back in, he finally addressed it. So, and then, even a lot of Republican friends I have, they're like, felt like Trump was just bringing up stupid points and like he wasn't doing good. It's just Biden looked so bad that, it made Trump look good just because Biden was that bad. But it wasn't because Trump had a great performance, right? It was like, then you had the moments, they're arguing about who's got a better golf handicap. It's embarrassing, man. And so the bottom line is, tough. And the other thing I'll say to people on both sides, that either are going to vote for Trump or are going to vote for Biden, you got to understand why people are going to do that, right? So for instance, obviously you got a certain amount of people that are always Dems, always Republicans, are always going to vote for whoever's the candidate in that party, right? But I think there's a lot of people that are in maybe the Republican Party or maybe are Trump supporters. They're like, how could people vote for Biden? He's clearly not with it. But you got to put the shoe on the other foot. Many people view Trump as a danger to America, right? They would rather have somebody that is completely incompetent lead the country and doesn't have a clue what is even going on than have Trump, which, that's their feeling, right? On the other side, people could say, how could somebody vote for Trump? Well, you saw the performance from Biden tonight. I mean, gosh, it looks like there's nothing up there. And so, it looks like a man that he shouldn't be anywhere near the presidential office. And so you gotta put the shoe on the other foot and look at it from kind of both perspectives, which I think is important. Because not a lot of people really, they look at it the other angle. They just think like, how could somebody vote for this person? And they don't never really look at it the other perspective. And like, I understand why there's going to be people going to vote for Biden, even though he looks absolutely horrible, because they view Trump as a literally a danger to America, right? And then I understand why a lot of people would vote for Trump. Just, when you see Biden, it's like, holy smokes, like what is going on there? And so, as an American, disappointing night. I saw a great tweet. Well, maybe they don't call it tweets anymore. It was a post, and it said, if you're from outside America, please turn off the debate. This is a family matter, and we don't want to be humiliated by everybody seeing this. And gosh, holy smokes, like just painful. And I even posted in the private group, I'm like, man, I miss like Romney and Obama debates. Like, at least that was good. At least we got like high level of intelligence. If like fifth graders and sixth graders feel like they're more competent than the two people on stage to like actually have a legit debate, you're in trouble. You're in trouble. And I think there's probably a lot of sixth graders who watched that debate tonight and walked away from that probably feeling like they're more intelligent than both those gentlemen that were on stage tonight. And that's, is that painful? But that's the state of what we got going on in this country. And so, we'll get through it. We'll get through it. Whoever's going to be the guy in the next 4 years, we'll get through it. We always do. But dang, man, my hope is for better in the future because it's tough. Okay, guys? All right, appreciate you joining me as always. Much love. Thanks for being here. Thanks for being subscribed. And have a great day. Peace.